Good afternoon. Today is Friday, December the 23rd, and this is the last Friday before the Christmas Eve tomorrow. And of course, Christmas is on Sunday. Wishing all a early Merry Christmas and Happy Holidays. And overnight on Wall Street, we have seen a bit of a reaction on the release of the revision of the third quarter GDP for the United States. It was surprisingly better than expected. The previous revision was for Q3 GDP in the US was 2.9%, coming from a negative 0.6%. That was a huge improvement. But last night revision was even better. I did not expect such an adjustment in the recent revision for the third quarter GDP, but it came in at 3.2%. Now, this means the US economy, based on this number, appears to be recovering, and is recovering very, very fast. And this is contrary to what I've been reading about the US economy, but let's see what happens. And but based on this number, let's take it at face value that the economy in the US has rebounded, and that should put the US economy on a firmer footing. So, but the funny thing is that the US equity actually dropped based on this data. Okay, so this morning most analysts and commentators will say, oh, because this third quarter GDP revision was good, it actually boosted the dollar, so it causes the US equity to slide back. Okay, but it does not sound correct to me. Okay, because the dollar did not move that much, okay, to actually elicit such a negative reaction in US equity. But anyway, let's take a look at the market and decide for ourselves what is the real reason for the pullback in US equity overnight. And in the Dow Jones, we have seen that the Dow Jones actually marginally took out the Tuesday low. Marginal, okay, because it wasn't a lot. Okay, the low traded last night was 32,573, which is just marginally below the Tuesday low, and this is the lowest we have seen so far this month. And towards the end of the market trading in New York last night, this index actually pulled back up a little bit, and there is a possibility that it may continue to adjust higher going into the pre-Christmas Eve holiday. The target for me will be maybe if the price managed to recover at 33,400 to 33,650 area. I think we possibly could see the re-emerging of selling interest. But again, we have to watch. I do not encourage you guys to actually take up new positions going into the super long weekend, because on Monday is Boxing Day, US market is not open, and then on Tuesday 27, even up to 28, there's a lot of other stock exchanges that are not open. For example, Hong Kong and Australia, even in the UK, the stock markets are not open. So even if they are open, the trading volume is going to be super low, and it's not ideal for trading. So maybe you should take a break, like what I should be doing. But because I've got existing positions still open in other assets, so maybe I will have no choice but to continue to monitor. But if you have a choice, try to avoid trading into the last week of the 2022 period because of very poor liquidity. Okay, over in the S&P 500, we did see a pullback, which is slightly more than what we have saw in the Dow Jones last night. The market pulled back to 3,764.5 and then started to rebound towards the closing of New York trading. Again, this market, if it does continue to extend higher because of short covering before the holidays, could see the S&P 500 goes back to the 3,900 levels. So anywhere between 3,890 to 3,935, I think is an area of vulnerability. If the market goes back into this bracket of prices, could not sustain, it is likely to fall back down again. Okay, so again, yesterday I did not get my sell order, which I intended to sell going into the number, but somehow the market just missed out by more than 20 points, and my order to sell did not get executed. So subsequently, I canceled that order. So now I have no working orders in the S&P 500, or for the matter, I have no working position in US equity index. Okay. Nasdaq actually have a more adverse reaction. The market went down a lot deeper, very much like the S&P 500. It went down to 10,784 before we see a marginal rebound. And even this rebound is not even comparable to S&P 500 or the Dow Jones. It is very, very shallow. So it means this particular index here is the weakest link among all the major US equity indices. This market is primed to come off going into 2023, because the tech stock sector although yes, the bubble has actually deflated quite a fair bit. If you look at the major tech stock like Tesla, for example, Tesla has come down by a whole chunk, okay, but the selling possibly is not over yet, so that could spill over at least into the first two months of trading in 2023. So going forward, I think this particular index is very vulnerable to downside movements. Okay, if the market can actually rebound, the 11,300 to 11,500 levels is going to be quite vulnerable in my opinion. Okay, over in Asia this morning, we see a little bit of a reaction in the Hong Kong market. Yesterday, we saw the market went up to 19,735 and then couldn't continue because Wall Street actually pulled back. So in reaction to the lower prices on Wall Street, the Hong Kong market also saw a similar pullback. But currently, it is still not a given that it will actually move a lot lower, because it has been supported very well technically based on the support line that we are seeing coming from the low in the low, I think was October 14. Okay, the low then was 14,000, almost 600, and the market has gone up to nearly 20,000. So this is a bit of a big move here. But you can see the market basically is still very much having the bullish bias. There's every possibility it will go back and test the 20,000 levels one more time. So we will have to see what the impact of this reopening of the border between China and Hong Kong is going to do for Hong Kong equities. And last night we have the official release of information saying that China is going to do away with the COVID restrictions for travelers into China. So that could actually play very well into Hong Kong and maybe Chinese equity markets. We have to see, but based on what we've seen so far in the morning, the Shanghai Composite continues to drop, and it has already been putting up a challenge based on the November low of 3,034, and this morning it did not quite go there, but it opened very close to this level and then rebounded. So there is everything going for the Chinese market because of this one policy, which is to relax the very strict zero COVID policy, and that has been largely been welcomed by markets, and there's a possibility this could be the catalyst to see Chinese equity market continue to drift higher. Okay, but until we see more robust rally, maybe this is a bit premature. We have to watch this development here. Over in Nikkei, we can see Nikkei actually continue to drop, even though I was very convinced that this market has already done with the correction, but this 4-year is rather steep. Okay, this brings forward the possibility that there is possibly a change in the character of this market here. Now, if you look at the higher time frame, which is this, okay, from the higher perspective, this if this is the reason why the market cannot go up, then I think there is possibly more bad news coming in for this particular index. Okay, so if we base on this fact that this is a larger three-wave correction or pullback, for now we can only call it as pullback, okay, but it could be a resumption of the bear market from 29,200 all the way to 25,600, then the rebound back to 28,500. This could lead the market even lower to somewhere near this price, which is 25,000. So 25,000 is a possibility. So if the market managed to recover anywhere to 27,000, this is screaming to be sold. So if the market ever come to this kind of level at 27,000, I am more than happy to take a look at the possibility of re-engaging this market for the very first time. Hopefully next year. I don't think this year is going to happen. I'm going to hold short position in Nikkei because the fundamentals are all wrong in Japan, and for continued losses in the Nikkei is a very high possibility, especially after this week unexpected surprise announcement by the BOJ saying that they're going to broaden and expand the possibility of a wider band for the interest rate to rise from 0.25 to 0.5. That is showing me one thing, that the BOJ has lost control. I think they have thrown in a towel to try to cap interest rates because that policy is failing big time. Okay, that's resulted in the dollar versus the yen raising up to 152. I think going to next year, we probably will see the resurgence of the dollar versus the yen, because I think this policy of very loose monetary policy and trying to cap interest rates is a little bit artificial, and I think the market is not buying it. And now that the BOJ has announced the broadening of this band, essentially is telling us this policy has failed. Okay, so we all know that the BOJ governor Kuruda is going to end his term next April. Not sure who's going to come in to take over his position, but I don't think it's going to be an enviable position to take on, because Japan has been a few decades into deflation. Okay, so it's going to be very hard to revive the Japanese economy, especially in the face of very aggressive rate hike by the Federal Reserve. Okay, over in dollar yen, we can see dollar yen actually recovered a little bit. So earlier on, I was mentioning analysts and commentator has been attributing the surprisingly good revision of the Q3 GDP numbers for the US is attributed to a strong dollar. But you can see dollar yen has hardly moved. It doesn't warrant such a big move in US equity market. So it's actually very, very shallow rebound. And based on this structure here, it may grind higher. Okay, if it does go up to 133.20 to 134 levels, perhaps this is a good level to look for selling opportunity, but don't jump the gun. Let the market drift higher, and then on the appearance of a reversal pattern, ideally a more classical reversal pattern, like a shooting star, that would be a great signal to actually re-engage the market on the short side. If this is so, I think the 130 levels may not even hold, and it may actually go a lot lower. Okay, maybe to the 120 levels. We will have to see, but again, this is a market based on the very sharp drop and very shallow rebound. This market is definitely calling for another drop. Okay. Over in sterling, the market actually drift lower to 1.1992. This is not far away from my original target of 1.19 even. Based on this reaction so far, it is no longer suitable to continue to sell sterling, even though the market have a little bit more space on the downside, but the risk reward doesn't warrant a trade at this moment in time. If the market ever drift higher, which is going to be a big if, 121.65 to 122.10 or 20 levels is going to be an area of opportunity, because we can see this round the market actually was struggling around here. There was a lot of attempt to cap this run, okay, which resulted eventually the market have to go the other way. The market will always find a path of less resistance, and for now the less resistance is supposedly to the downside. Okay, but at this current price, is no longer viable to continue to sell sterling at this current level. So I have a working order to sell, but I'm going to cancel it later on after I finish this recording. And I'm holding on to euro versus the dollar, which is again a major disappointment. It did not have any kind of reaction, not even like what we saw in sterling. I was hoping that the price would actually come down a lot more aggressive than it has been doing so far. In fact, the market has been, sidelining for quite some time now. Okay, since the middle of the month until now, we have seen more than 10 days of sideways movement in the euro versus the dollar. Maybe but anyway, I'm already short this, and I'm short two position. I'm short at 106.36 and I'm short at 106.55. So basically I have two short position. Hopefully the market can drift lower. I'm waiting for that reaction to the downside. Okay, because the market has already taken out a major support line, and this is indicative that the prices probably will drift lower, but I yet to see a very decisive break to the downside. So hopefully I can see it before the year end. In the meantime, I'll just hang on to this euro versus the dollar, because it's a very, very low risk trade. I'm putting my stop just over 107.36. So I'm just hoping that this market can drift lower, take out the December low at 104, for example, and then drift lower to all the way to 102.25 levels. Okay, so I'm hoping that it's going to be a big payoff for me, just that it's not happening over the last 10 days. It may yet happen. Okay, over in the Aussie, we see a big of a pullback, and the market actually rebounded 50% from the low of 066.29 to 067.65 before it pulls back down. So this market is actually also not ideal for selling. If you have not already sold at 0.67 half, then this level currently at 0.6680 is definitely not a good place to be selling, because my target is only at 0.6585. So the downside potential is getting diminished, whereas the upside risk is pretty high. So do not get, I'm not going to look to do anything in Aussie dollars for now. Whereas the dollar CAC is a different kettle of fish. Okay, dollar CAC actually pulls back also 61.8%. Okay, into this bracket of prices which I have shared with you yesterday, which is 1.3560 to 1.3590 levels. Market went down to a low of 1.3570 last night before we see a relatively large jump. Okay, so this reinforced my belief that there is still buyer in the dollar versus Canadian. Okay, if the market can take out a December high so far at 137, my target is at 138. So hopefully market can actually go higher, take out 137 on the way to 138. Okay, so this is still a very good risk reward ratio for a trade, but considering we only have a last few days of trading, maybe we take it we'll take a rain check here. Okay, now, over in crude oil, we also have a reaction. Okay, GDP numbers revision was good, so that means there should be more demand for energy product. But what we are seeing is exact opposite. Okay, so the market went up to a high of nearly $80 per barrel just before the number was released, and when the number was released, it went out $2 to $77.03 before we see a 50% rebound so far this morning. So sometimes you just cannot reason why the market react the way it did, because you based on reasoning, this is not the reason why it should be coming down. But by and large, technically I'm bullish on crude oil. For one, it has taken out a long-term resistance line and stay well above it. And the three-way structure means that there is a possibility for the market to go up to at least $81, if not $83, which was my original target. I'm long crude oil for quite some time now, and I bought some more at the 74 levels, and I'm hoping that I can get out at just under maybe $83. Okay, that will be a nice Christmas present for me. The market can go up to $83. Okay, let me see. In the gold market, this is interesting. Gold market actually came off quite a fair bit. Market was actually attempting to challenge the December high at $1,824.50, but the highest it could do was $1,823.80. That was on Wednesday. So yesterday there was no new high traded, and yesterday I actually made a trade call. I actually share my trade call with somebody, and I tell him that I want to sell. In fact, I sold at $1,817 thereabout, and yesterday there's a big sell-off all the way to $1,783.70, and it does not look like it's over yet. There's a possibility it will go down even lower, and ideally it will go down and challenge the December low at 1,743.7, and my target is $1,730. Okay, thereabout. So this is my target. Okay, my technically the target is at 1,721.5 to $1,741. Okay, so there is still a bit of a downside potential, but unless it's going to be a more sensible bounce, I don't recommend you to chase now if you have not already sold. Okay, so I'm sitting on a pretty position in short gold position. Hopefully, again, like crude oil, I hope to get a very nice Christmas present from the market. Okay, over in silver, we did see a pullback from just under $24.30, and then market went down to $23.38, and this does still maintain a very bullish uptick because the price is still trading within this rising channel here. I hope that market can come down to a more sensible level to maybe somewhere below $23. I originally was expecting $22. That would be ideal, but based on the very bullish structure of this silver market here, it does not look like even $22 will be achievable, but I will have to look. Okay, especially going into the delivery with the going to December 27. Okay, it is going to be where the COMEX futures and options going to expire. It's a witching day, so we want to see whether there's going to be any reaction to the upside, because based on last month's expiration on both the option and futures contract on COMEX precious metals, we did see a large transaction end up in delivery. Okay, and that being the case, I know for a fact the warehouse stocks for silver is actually very, very low. So if this month December 27 expiration resulted in another spike in delivery, I think the short position that the bullion bands are holding is going to be covered. Okay, many to say that there's likely to be a short squeeze in the silver market. So I am actually very long-term bullish on silver. If the price can come down a little bit lower, below $23, maybe I will have to make do with the price and bite the bullet. Okay, I not only will be buying the futures contract, and I will also be looking to buy the physical coin. Okay, so I'm hoping that the shops opens during the festive season for me to go in and buy at anywhere below $23 per ounce. Okay, over in crypto market, hardly anything has moved, although we did see a bit of a movements here. The market for Bitcoin actually traded a lot of 16,283 as of last Tuesday, and we saw a rebound back to $17,000 before it pulls back. Now this does give rise to the possibility we may see a three-wave rebound all the way to $17,330. So that is the possibility over here, but this is a technical rebound, and the price goes up into this bracket of prices between 17,335 to, let's say, 17,550. I think this is an area of opportunity. Maybe we can look for sign the market may see the appearance of selling interest, and then we can take the ride along with them. Over the long term, I do believe Bitcoin is geared for lower prices going into 2023. The next halving event is not going to happen until April. So from now until then, there's still a few more months to go before for the market to drift lower. Okay. Over in Ethereum, we did see a bit of a pullback. Okay, a rebound has already happened. We see a three-way, very similar three-way rally. This morning, we see a high of 1,224. 234, and then you can see that the extended rally could actually trade all the way to 1,250 levels. And if this is the case, this is an area of, again, very similar opportunity that what we see in the Bitcoin. This is an area maybe we can see the re-emerging of selling interest, which may take the Ethereum token all the way down. Okay. Ripple is also seeing a technical rebound. And if we see this three-way pullback similar to what we saw in Bitcoin and Ethereum, there's every likelihood we may see this price go up to 36 cents. Okay, 36 cents is not that far away, so possibly the market will be heading for that level here. Binance coin also is quite stable over the last 48 hours. You can see the rebound from $220 all the way to $254, pulling back. And now if the market can extend higher, the max I can see is $270 or $280 at best. Okay, so this area is an area of vulnerability to me, okay, technically. So there's no real reason why you should be buying Binance coin, especially after the US Department of Justice has already put Binance into the crosshair and accusing them of money laundering. So this is not a good development to be buying any kind of Binance coin. Okay. Dogecoins, again, we have no news from Elon Musk, which is good news. Okay, because for some reason Dogecoins is actually closely associated to everything Elon Musk is doing. So long as Elon Musk keeps his mouth shut, there will be nothing to cause this particular coin, this particular token to actually come off. Okay, so we will have to see what else can happen, but topside is quite limited. Even if we get a rally in Dogecoin, upside is only 8 cents to 9 cents. Okay, Cardano actually recovered from the year low of 0.247. Now we can see market hitting my target of 0.264, which is the bare minimum for this run. I think the market may still have a bit of upside left, but this is not a market to buy. Okay, I will not be buying this market because there is really no reason why I should be buying Cardano, or for that matter, I should buy any kind of cryptocurrencies for now, going into 2023. Things may change next year. We will see how. Until then, I wish you guys a happy holidays and a great weekend ahead. Bye-bye.